Well, hi there and welcome to the ISC FX Options Weekly Outlook for January 23rd, 2012. As always, this is Jason Ayers of OptionsSource.net. Let's start off with a look at the weekly chart of the U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. Well, the dollar index ended last week with a test of the 80 support level. Now, failure to hold this level opens the window for further U.S. dollar weakness. A reversal off of these levels should trigger a continuation higher, with the next overhead resistance sitting within this 82-83 focal zone. Let's take a look at the daily chart. The daily chart reflects a break of the trend line identified last week and the important support level sitting at 80. Next up, the CDD, the US dollar versus the Canadian dollar. Well, the CDD continues to respect the sideways triangle we identified last week, denoting some indecisiveness. The 101 level is being pressured to hold as support, however, and the 103-104 focal zone still remains an important overhead resistance. Let's take a look at the YUK, the US dollar versus the Japanese yen. Well, the 76.5, 77 support level held last week. A break below 76.5 opens the window for further US dollar decline. Should the pair hold above the 77 level, we would look for a retest of 78. Let's take a look at the EUI, the US dollar versus the euro. Well, the EUI broke the uptrend that we identified last week and appears to be heading lower for a test of 77. As long as the 76-77 level holds, we are open for a continuation higher, with the 78-79 focal zone acting as a key overhead resistance. Let's take a look at the US dollar versus the pound as seen here in the BPX. Well, the BPX lost considerable ground last week, failing to hold above 65. 63.5, 64 is the next key support level. We will need to see a break back above 65 to signal a move higher. Let's take a look at the AUX, the US dollar versus the Australian dollar. The AUX continues to trend to the downside after failing to break higher last week. Now, 94.95 is the next major support level. We need to see a break back above this 97 level in order to signal a reversal of the downtrend and a potential opportunity to trade a move higher. Let's take a look at a few of our key points. First of all, the US dollar index pulled back to test 80 as anticipated. This level should hold as support. However, we are open to the potential of a deeper retracement. The CDD continues to appear indecisive, dropping slightly lower but holding support at 101. 103 remains an important overhead resistance. The YUK continues to test support at 76.5, 77. As with last week, the pair appears indecisive, and we will watch for a break below 76.5 support level to signal a move lower. The EUI broke the trend line we identified last week and appears to be heading lower to test 76.77 for support. A break back above 78 lends credibility to a continuation higher. The BPX reversed below 65 and appears to be heading lower. A break back above 65 should signal a continuation higher. The AUX continues to trend lower. A break back above 97 will lend credibility to a change towards the upside. And this has been your ISC FX Options Weekly Outlook for January 23rd, 2012. As always, this is Jason Ayers of OptionsSource.net, reminding you to sign up for your free webinar at www.optionssource.net.